We are live. Welcome back to my YouTube channel, guys. All right. So in today's beginners class, we'll be teaching you a lot. Right. Just stay tuned. Also, if you are joining us for the first time, please subscribe, like, share, and comment. Also, ask questions if you want to ask any question. If you can, if you have any question to ask, ask. Also, share this link. Share this link for anyone that wants to watch. For any beginner trader, share this link and let's welcome our boss Gideon FX. Welcome, brother. Welcome, brother. Welcome, brother. So
Thank you
tonight he
very
will be
much.
teaching us. He will be teaching us a lot of things. Just stay tuned. We have two people already live joining us. Yeah. We're going. Please share the link. Share the link. Thank you so much, brother. So over to you, bro.
Okay, I guess you guys can already hear me and see me. I want a good evening to everyone that's on this live right now. I want to really appreciate you for taking time to join us, in this live. So I'm going to be I'm going to be covering a lot of things concerning forex trading, concerning forex trading. So I'm going to start with the beginning of forex. What is forex? What is forex, if I may ask? Forex is the ability for you to buy and sell. Forex is is as simple as that. It's the ability for you to buy and sell. It's just as simple as that. So don't let anybody, don't let anybody complicate anything for you. Don't let anybody complicate anything for you. Forex is just the ability for you to be able to buy and sell. Nothing else, nothing more. So, what's the full meaning of forex? Forex simply means the foreign exchange market. The foreign exchange market. And as for a lot of you beginners, for a lot of you that are beginners that just got into the forex space, trust me, you meet a lot of people deceiving you or talking to you or making forex look complicated. Forex is not complicated at all. Forex is as easy as it sounds. Just that for you to fully learn forex or for you to fully master forex, it's going to take a lot of time, commitment, dedication, hard work. So those are the major things that are being involved in forex trading. It will take your time, it needs your dedication, it needs your hard work. And one major thing, commitment. You need to be committed. You need to be very, very much committed to trading. You need to be very much committed to trading. When you are committed to trading, trust me, you will see a lot of growth, a lot of development. And coming on, yeah, I am I want to make it like, I don't want to use any complicated words. I don't want to use any um difficult, like all these big statements, big statements in forex. Those ones are just, they are just used for cover. And one thing you should know about forex, is that in forex trading there are different strategies to forex trading. There are different strategies to forex trading. Don't kill yourself. Don't go around and be looking for the best strategy. There's no strategy that is the best. There's no one that is the best. Just look for a simple strategy that works for you. If you see a simple strategy that works for you, go ahead with that simple strategy. Don't allow anybody complicate anything for you. Forex, forex trading is as easy as it sounds. Trust me. Because you might come now, you will go here, you will be hearing um SMC strategy, ICT strategy, you will still go, you will be hearing different strategy. See, just focus on one thing. As far as that thing works for you, stick to it. Don't let anybody make forex complicated for you. Don't let anybody make forex complicated for you. So on our today's talk, we're going to be talking about like everything that you need to know under forex. Like every single thing from starting to the bottom, like from the beginning to the end. So the first thing I'm going to be talking about is I'm going to be talking about everything concerning forex, forex trading, why we trade forex. I'm going to be talking about why we trade forex. I'm going to be talking about market size. I'm going to be talking about brokers. I'm going to be talking about lot size. I'm going to be talking about pips. I'm going to be talking about spread. I'm going to be talking about forex orders. And I'm just going to be talking about everything that based on the aspect of forex. That's what I'm going to be talking about. Then I'm going to move on to talk about forex brokers and forex analysis, the types of analysis to do as a forex trader, types of analysis to do. Then I'm going to move after that. I'm going to move on to market structure. I'm going to talk about market structure. I'm going to talk about the whole types of analysis, the different types of analysis. I'm going to talk about fundamental analysis. I'm going to talk about um, sentimental analysis, and I'm going to talk about technical analysis. I'm going to talk about psychology. I'm going to talk about risk management. I'm going to talk about money management. I'm going to talk about trade management, how to manage your trade, for you to know how to manage your trade. So those are the things, how to set your, how to calculate your pips, movement of pips. I'm going to tell you guys how to calculate your lot size. And lastly, I'm going to I'm going to teach you guys how to stick to one market, because that's the only way you can really make good amount of money from this forex market. A lot of people will be distracting themselves trying to trade like 10 markets, 10 markets, 10 markets. Most people that usually trade different markets are people that usually depend on signals to make their money. Are people that depend on signals to make their money. If you are not that kind of person that depends on signals, those um those things are not necessary. If you are not a person that depends on signals, that the only thing that you need to trade, the only thing that work for you is signals. You don't want to learn markets, you don't want to learn about forex, you don't want to learn anything about forex. So it's only those people that get themselves confused by trading different markets. So I'm going to teach you guys how to stick to one market, because that's one very good way you can make money from this market. How to focus on one market. So I'm going to begin by talking about forex, what forex is, how to trade forex. So as we all started, we all know what forex is, which is the foreign exchange market. Which is the foreign exchange. Forex is the ability for you to buy and sell as usual. So why do people trade forex? Why do people trade forex? So that is a very funny question, because a lot of people will say, why do I cheat for this? To make money now. That though that is the end goal. That is the end goal, to make money. But outside to make money, why should you choose forex trading? Why not trade stocks or futures? Why trade forex? So the reason that for that I'm going to be like stating reasons why you are to trade just forex. You should leave other You should leave things like stocks. If you are good with stocks, go ahead. If you are good with futures, go ahead. But there are a lot of advantage to trading forex than trading stocks and futures and all those things. For example, number one, let's look into commissions. Let's look into commissions. The way most of all these things are affected by brokers. Normally, if you are using a very good brokers don't charge commissions while you are trading forex. They don't charge commissions while you are trading forex. In forex, the transaction cost is very low. The transaction cost is very low. If you start trading stocks and futures, you will understand what I mean. When you take a trade, the transaction cost on the transaction cost for futures and stocks are very very high, while for forex it's very low. It's very low. 24 hours market, the market moves for 24 hours, which enables you, like gives you the ability for you to trade during in the morning, in the afternoon, in the evening. Gives you that space. So the market moves for 24 hours straight. Forex gives leverage, which brokers do help with. Forex give leverage. So there are a lot of good reasons why you are to trade forex. A lot of advantage to forex. A lot of advantage to forex. That's why we really trade forex. It's not just basically because the end goal is to make money. It's because there are some advantages. There are some advantages attracted to it, which I've mentioned. No commission, the spread there is low. Um, no commission, the spread is low. So let's move on to forex brokers. So to make it easy for you, forex brokers are simply the people that helps with the transaction between you and the market. Is between you and the market. So you know, as a normal person, you can't access the market without using a broker. You can't access the market without using a broker. If you look far back in the days, a normal a normal person like us, should I say a normal citizen also, a normal person can't just trade the forex market. It was very very difficult. It was very very difficult. So it was only big banks. It was big banks that could trade the forex market, brokers that could trade the forex market. Just those people, because them had easy access. Banks could trade the forex market. They had easy access to trading the forex market. But after some time, they brought about retail traders, whereby we go through the brokers to access the market. Then, if we get our analysis correct, we make money, and if we don't get our analysis correct, we lose money. So, and there are different brokers. There are different brokers to know about. There are a lot of brokers. So best, one of the best, which I will recommend for everybody, is Xness. Xness broker. Xness broker is one of the best. If you are watching this video and you want to create an Xness broker, if you go to the description, I think there's a link there for you to get an Xness account. So those are forex brokers. Forex brokers are the ones that give us access to the trading the forex market. So as a beginner, you need to be very very careful. You need to be extremely careful, because there are a lot of scams out there that are looking for ways to scam people. So don't go and use um unauthorized broker, or brokers that are not legit, because it will be easy for them to scam beginners. It will be very very easy. So you need brokers that are legit. For example, Xness broker is one of them. They are the ones that exist with partnership with them, and their payout is really really good. If you know how to trade and you trade with them, to make a withdrawal is easy, deposit is easy. So those are for forex brokers. Forex brokers are the ones that give us access to the market. Now let's go into analysis. What are the three types of analysis? There is fundamental analysis, there is technical analysis, and there is sentimental analysis. So what is technical analysis? Let's start with technical analysis. Technical analysis is the ability for you to analyze the market using supply demand, trend lines, using your Fibonacci, using your trading tools, using trend lines, using support resistance. So those are just the things for technical analysis, whereby you are able to project where the market is going to move to next with technical analysis. Then you have the fundamental analysis. For example, fundamental analysis is the ability for you to trade with news, for you to trade with news. So fundamental analysis is all about trading with news. It's trading with news, while sentimental is using data that are being provided by big firms to trade, whereby you are looking at maybe you are looking there are websites, there are different websites that usually give back end data. So those people that use back end data to trade are called sedimental traders. Those ones, they don't do technical analysis, they don't do fundamental, they just work with data given to them. So those are sedimental traders. So those are just the basic three types of analysis we have. We have no other type of analysis. We have no other type of analysis. So now I'm going to talk about I'm going to talk about some of the technical analysis we usually see in the chart. Some of the technical analysis we see in the chart. Some of the technical analysis, that's what I'm going to be talking about currently. So I'm going to start off by talking about support and resistance. Support and resistance is one of the easiest strategy. It's like one of the easiest strategy in the forex market, and it's it's very simple. It's not complex. It's not complex at all. Support and resistance is not complex at all. It's not complex. A lot of people make it a lot of people make it very, very complicated. It is not at all. It is not complex at all. So we are going to be looking at support and resistance. We are going to be looking at Fibonacci. We are going to be looking at candlesticks. We are going to be talking about moving average. So when we are talking about support and resistance is, first of all, resistance. Looking at the word resistance, if you really look at the word resistance, you will know that when they say something is resistant, is that something that, let's say you have touched something, like let's say you go to something, you resist to it, you go to something, you resist to it, then that's same thing with support and resistance. So that's just basically it. So I'm going to go over to my chart now. I'm going to go over to my chart to make it easier for everybody. I'm going to go over to my chart and explain what support and resistance really look like. What support and resistance really look like. So um, for instance, if you look at the chart currently, you can call this you can call this a resistant level, and you can call this here, you can call this a support level. So a resistance, as I said, is when something goes is when a resistance is when the market moves up to the upside, comes down, also moves up again, comes down, moves up. As far as it does not break above this, as far as it does not break above this top, as far as it does not break above this top, as far as it does not break above this top, this area here, this is called the resistance, and below here is called the support. So these are just support and resistance. So just imagine you were to trade today and you were using support and resistance strategy, and you just got here and you said market goes here, comes down, market touch again, comes down. Once market goes, you enter a sell from here and you catch all the way down to this level here. So support and resistance is actually a good strategy. Don't make it too complicated for yourself. We are going to still talk about candlestick and confirmation. Candlestick confirmation. I'm still going to talk about candlestick confirmation. I'm still going to talk about candlestick confirmation. So in trading, there are different types of candlestick confirmations. There are different types of candlestick confirmations. There is bearish engulfing candle, there is bullish engulfing candle, there is pin bar, there is dodge candle, etc. So I'm not going to really go in details of everything, because for us to intro, we're basically just giving you guys a glance of what forex trading is all about. I'm just basically giving you guys a glance of what you do. when you want to really, because the best thing to go for forex trading is to go for mentorship. If you can get a proper mentor can give you in details of what everything. So I'm just using this is like an insight for you guys to just know about forex trading. So those are the different types of candlesticks we have. I'll continue. So that those are the different type of candlestick we have. They will also have the Fibonacci. The Fibonacci is used to trade trending markets. Trending markets. That's what Fibonacci is used. Then you also have the moving average. Moving average is also used to trade trending markets. It's also one of the things used to trade trending markets. So with all that said, I'm going to now talk about um, the aspect of I'm going to talk about the aspect of what market orders are and what instant execution market orders are and pending orders are. So we all know that the end goal of trading forex is to make money. Is to make money. So I'm going to be talking about orders. We have the market orders, we have pending orders. Market orders are instant execution. Instant execution. While pending orders are orders that are being taken when you are not on the chart. Those are just the simple definitions. We have the instant market execution and we have um the pending order. Pending order as if you know you are not going to be present in the chart, you use pending order, then your pending order will be activated for you to like trade, for you to take your trade. So with all that said, um we're going to go into the different types because we're going to go into the psychology aspect of trading. When it comes to psychology, that's where a lot of trader feels. A lot of trader feels. I'm going to be using my charts to explain psychology. What psychological trading simply means. Me, me as a trader that I am, as a trader that I am, I'm very honored that I'm on this platform, really sharing a lot with you guys. As you guys can see, I most of the times I always leave my trades on the charts. I always leave my trades on the charts. The trades I've taken before, I always leave it on the charts. I always leave them so that I could reference to them later in the future. And every trade I took here has a reason for me taking it. Every single trade I took has its reason for me taking it. So I'm going to talk about psychology. Psychology is one of the one major problem that trader has that we traders have. So it took me time to work on my psychology. It took me time to work on my. I will not lie about that. I will not lie about that. It took me time to work on my psychology. So how can you work on your psychology? If you look at a lot of traders when you are trading, you know when you are trading it involves money. Let's take for instance this trade here. You want to take a trade. You open a buy position. Market goes to the upside. You can see that. Let me zoom in so that you guys can see it clearly. Okay, now you guys can see it clearly. So this was where let's say this was where I took the entry. This was where I took the entry. This is me. This was let me use an example of me before and me after. So me before I took the trade here. This was where I entered the trade. The market came up. I was running in profits. I was running in profits. The market dropped. I entered loss. Oh, I was very, very skeptical. I was afraid. I was afraid. The market will come again to profit. Immediately markets enter profit. I've taken the profit already. I've taken the profit. The market comes down, comes down. Before you know, market shoots up and hit my take profits. That was me before. So you will be angry at yourself that why did you close the trade? you know that you analyze this blah blah, you just be giving yourself different excuses. Those things are bad. You need to really work on your psychology. You need to really work on your psychology. First of all, when you are a trader, any money you are putting into the market, you should make up your mind that that money you don't need it again. Like, if the money goes, it goes. If the money goes, it goes. If the money comes back, it comes. If I get profit, I get profit. If I lose the money, I lose the money. That's why I pity a lot of people that put in their, let's say, for example, school fees. Some people that put in their school fees, some people that say that they put in their house rent. All those things are not necessary. Put in money you know you can lose as a person. You can lose. It's not money that you can't lose. For if you want to trade, you have to put in money that you yourself know that you can lose. You can lose as forex trader. So how was I able to solve this problem? How was I able to fix this problem? How was I able to fix my psychology? So me now, as a trader, immediately I make my entry. Now currently, immediately I make my entry as a trader. I make my entry. I set my stop loss and my take profit. I don't want to know if the thing hits my stop loss. I don't want to know if the thing hit my take profit. I just make up my mind that I've done my analysis. I've done everything I want to do. All I just want is for the trade to play out. Then I close my chat. I close my phone. Not that I completely leave, like I completely ignore the trade. Oh, I still like watch the market for. I still watch the market for some kind of, maybe, if I see a move that is making and I know that market is not longer going to my direction, I can close my trade. I can close my trade and I'm done for the day. But after some time, I started monitoring the. I will be monitoring the market once in a while. So I stopped, maybe, like, because at that point in time, when I was trading before, my psychology was not very strong. I was always watching the charts. I was only constantly watching the charts to see if market will go my direction or if it will not go to my direction. I was constantly watching the charts. But after a while, I improved in my trading psychology, and I started leaving the charts. Then just come back, check on it and go again, come back, check on it and go again, come back, check on it and go again. So that was how I was able to improve my I was able to improve my psychology, especially for leaving trades. Leaving trade, because I had that issue of, if if my this thing was in profit, it enters loss. If it goes to profit immediately, I close. I don't waste time. I don't waste time. I just close. But after some time, I worked on my psychology and it was going well for me. So as you can see, after I set my take profit, my stop loss, I left this chart and I was checking it up once in a while, once in a while. Before you know, my take profit was hit. That was how I was able to take one, two. I took a loss on this trade here, on this particular trade here. I took a loss. Then this trade here, this was another one I hit take profit for, and so on and so forth. So that's just that's just one thing about psychology. First of all, first thing is first, you need to be ready to lose the money. You need to be ready to lose the money. You need to be ready, because if you can't lose the money, your mind will not be at rest. And if your mind is not at rest, your psychology will be tampered with. So whenever you take a trade, when you set your stop loss and you set your take profit, that stop loss, just make up your mind that this money I've lost it. This money I've lost it already. Just let the money go. Like, let it go. Don't carry the don't carry it on your head and say, no, I can't just lose this money like that. Let it be. Let the markets play out. You don't have you don't control the markets. You don't have control over the market. So just let the market play out as it wants to play out. Let the market play out as it wants to play out. So that's for the aspect of psychology. You need to be ready to lose money. Then you need to be ready to leave your trades to play out the way it wants to play out. And under psychology, you still need to be you still need to have the spirit of commitment, hard work, and dedication to trading. These things are very important. These things are very, very important. The hard work, commitment, and dedication to trading. You need to have those ability. So after psychology, I'm going to be talking about risk management. Risk management is also another important thing we need to know that backs up psychology. Risk management is another thing we need to know that backs up psychology. Trust me, risk management is one very important thing that you need to actually know as a trader that backs up psychology. Like a lot of people, they don't know how to apply risk management. That's why you see a lot of forex traders blow their account. A lot of forex traders blow their account. Like now, today that, for example, today that was NFP, a lot of traders that were my friends, a lot of my friends that were traders that I just met, a lot of them were telling me that I blew my account, I blew my account, I blew my account, I blew my account, I blew my account. Me, I was just should I say laughing? I was just calm. Let me not use the word laugh. I was just maybe just it was kind of funny because I warned all of them. I warned all of them about NFP today. I warned all of them about NFP. And me, I'm a trader. I don't trade news. I trade after the news. I hope you understand me. I don't trade the news. I trade after the news. I don't trade news. I trade after the news. So if you are trading, the truth of the matter is that most of all those information that are being released, most of all those information that are being released are basically are basically immediately the information is dropped, it affects the market. So what you are simply doing at that point in time is gambling. You are not trading because you don't actually know if market will go up or down. Nobody is going to release the information before time. So if the market goes your way, good for you. If the market goes against you, or you're for you. So that's just basically it. So let me for instance now let me show you something. Let me show you guys today's NFP. Let me show you how fun it was today. So some people came to my DM today. Some people came to my DM today and told me that NFP was going to be a sell. Was going to be a sell. See what NFP did to them. See what NFP did to them. See the way NFP just did. When news came out, the market came down like this. So people that were thinking that NFP was going to be a sell and they were already making money, they were happy that they are making money. They were already, I believe many of them were already taking screenshots, wanting to post that they were making money. Then see what market now did. Market now turned around and moved to the upside. So you can tell me that for market to move from here to here, somebody's account will not blow. Uh-uh. When most of all those gamblers, they like going all in. They call themselves trader, but they like going all in. If you gamble it and make money is good. If you gamble it and lose all your money, is it that no? But just know that risk management is a very, very important rule. It's a very, very important rule. So with risk management, you also have your lot size. Your lot size part of your risk management. Your lot size should be part of your risk management. So when you want to take a trade, for instance, let's use this trade as an example. Let's use this trade as an example. Let's use this as an example. So let's say you want to take this trade and you have like $100 account. Let's say you have $100 account. You want to take this trade. And in that $100, you are willing to risk $20. You are willing to risk $20 to make like $50. So when you have looked at this, you have already brought out your risk management already. You are willing to lose you yourself from your $100. You are willing to lose 20 to make 50. Your take profit is $50. Your stop loss should be $20. So by the time you've already drawn that out, the next thing you need to do is to calculate the lot size to use. So when you've seen the amount of pips, like from here to here, you've calculated the amount of pips of your stop loss, you've calculated the amount of pips of your take profit, then you have what they call there's what they call lot size calculator. There's what they call lot size calculator. You can still use that one. That is what helps a lot of traders to in risk management. Lot size calculator. So you put the amount of pips that is your stop loss, you put the amount of pips for your take profit, then you pick the pair you are trading, then your account size. By the time you pick all those things, they will tell you the lot size to use. The lot size that they give you, when you use it to take that trade, you take that trade, you are going to set the exact stop loss and the exact take profit. If the market hit your stop loss, you'll be having $80 left. If it hit your take profit, you'll be having $150, which is a very, very good trade. Which is a very good trade. Just imagine yourself risking $10 to make $50. That's a good trade. And if every trade you are taking in your $100 account is to you are risking only $20, that means you have 5 trades. You have 5 trades altogether. That means before you even blow your $100 account, before you blow your $100 account, before you blow your $100 account, you can trade 5 good times. 5 good times before you blow your $100 account. So you need to calculate the amount of risk you are taking as a trader. You need to calculate those things to help you in the market. Because you don't go into the market like that. That's why you see some people blowing their account and you are saying then you see some people taking many risks, making money. Make Taking a lot of risk and making money. You can still take a lot of risk and lose the money. So you need to apply discipline as a trader. Because if you are growing small, just imagine every single day of your life as a trader, you are taking a trade and you are risking only $20 for every trade. $20 for every trade. $20 to make $50 for every trade. Trust me, within a week, you can make about $200 on top your $100. You can make $200 on top your 100. So that is to show you how sweet and easy it is. That's to show you how sweet and easy it is. So now I'm going to be moving on. I've talked about risk management in association with lot size. Now I'm going to be talking about money management. Money management. How do you manage your money? How do you apply money management? Money management is all about protecting your capital. So if you are a trader and you know that risk management is too much for you, risk management is too much for you, and you want to apply money management, it can also help you as a trader. So now let me explain it to my chart. Let's say you have $100 account, right? Then you take this particular trade. This is your entry, this is your stop loss, this is your take profit, and you wait for market to start moving to your direction. Immediately you see that market has started moving to your direction, you take your stop loss, you will take your stop loss immediately immediately to your entry, immediately to your entry, so that if market hit your take profit, you make money. If a market hits your stop loss, you don't if market hits your stop loss at the entry, you don't lose any money. So that's money management. Money management is the ability for you to protect your capital. You taking your stop loss to your entry means that you are protecting your capital. Market is already moving to your direction. You are just either waiting for it to hit your take profit, or it comes back to hit your stop loss. So even if it come back to hit your stop loss, you don't lose any money. You don't lose any money. You don't lose any money at all, because what are you doing? As I said before, you are protecting your capital. You are protecting your capital. So that's for money management. Money management is the ability for you to protect your capital. For every trade you are taking, anytime market start moving into your direction, you take your stop loss to entry and leave it there, and you are protecting your capital. What is trade management? All of them are risk management, money management, trade management. All of them relate in a particular way. Trade management is the ability for you to hold your trade, to manage your trade, to know when to close your trade, to know when to leave the trade, to know when to take your stop loss to break even. So that's trade management. That's trade management. So trade management is also a very plays a very vital role in all this. Money, as I've said, I've talked about psychology, risk management, money management, and trade management. You need to know how to manage your trade. You need to know when to get out of the trade. You need to know when to you need to know when to set a lot of things in the market. You need to know when to leave a trade. You need to know when to set your stop loss. You need to know all this. It will help you as a trader. It will help you as a trader. So, with all this said, I'm still going to be talking about. I want to add something. I want to add something. I want to add something. I want to talk about when to trade. I want to talk about when to trade. You see, a lot of people just come to the market. A lot of people just open the market and they are like, I want to trade. I want to trade. You need to know when like the particular session, the particular time. You need to know when to trade. You need to know the time to trade. You can't just come up and say you want to trade and you just start trading. That is not the way trading works. Trading does not work like that. Trading does not work like that. So you need to know when to trade. You need to know when to trade. So there are basically 4 sessions. Like in the whole 24 hours, in the whole 24 hours, there are basically 4 sessions. There are basically 4 sessions for every trader to trade. There are basically 4 sessions. As usual, as we start with, we have the London session first. After the London session, we have the New York session. After the New York section, we have the Tokyo, the Sydney section. Sydney. After Sydney, we have lastly the Tokyo. So these are the 4 major sessions we have in the forex market. The 4 major sessions we have in the forex market. So first of all, we have London, we have New York, we have Sydney, and we have Tokyo. So London session starts from. I'm going to be using Nigeria time. I'm going to be using Nigeria time. I'm going to be using Nigeria time. Then London session starts from 8 a.m. to 2 p.m. New York session starts from 2 p.m. to 7 p.m. Sydney section starts from 7 p.m. and ends at 12 p.m. Tokyo session starts from 12 p.m. So Tokyo section starts from that 12 p.m. and all ends at 8 a.m. again. So it's just like a it just goes around. It just goes around. It goes around. It goes around. So you need to know the time to trade. For example, now me as a trader, I basically trade only GBP USD. That's Excuse me. That's the British pounds versus the US dollar. This is what I only trade. And the times I trade are only during the London session and the New York session. These are the only two times I trade. These are the only two times I trade. London session, New York session. Apart from these two sessions, I don't trade during Sydney session. I don't trade during Tokyo session. I don't trade. I only trade during London and New York session. So basically, if you want to put it, if you want to like do it, I basically trade from 8 a.m. to 7 p.m. But this is now where the reverse is. From this 8 a.m. to 7 p.m., it does not mean that I will sit down and be watching my charts from 8 a.m. to 7 p.m. looking for a trade to take. That's not what I'll be doing. That's not what I'm going to be doing. I'm just simply going to within 8 a.m. and 7 p.m. That's the only time I am wanting to ever take a trade. I'm doing my analysis, looking for a good setup. Once I see a good setup, I take the trade, and boom, I'm done for the day. I'm done for the day. So most traders, most traders, I don't know why they like you hit take you trade today, you hit take profit, then you are looking for another trade again, you hit take profit. You are just looking before you know you have taken a particular trade, you have lost everything. That is indiscipline. If you are a trader, especially a day trader, you are not a swing trader, you are not an intraday trader. If you are a day trader, every one single setup a day is enough. One single setup a day is enough. That's all you need. That's all you need. And that will also help you minimize your loss. One or two a day is enough. One or two a day. So what do I mean? If you take like for example, you do your market analysis, you took this trade, boom, you hit your take profit. Then before you know again, you are looking for another trade again. You want to still sell, you want to still buy. No, it's not that. That's indiscipline. As a trader, you need to just look for a single setup. You take the trade. Once it hits your take profit, you have made money for that day. You are done. Go and rest. Let's say, for example, you looked for a setup. You got a setup. Maybe you enter the trade by let's say 9 a.m. Then by 11 a.m. your take profit has been hit. Like you are done for the day. Go and flex your life for the remaining hours. Just go and enjoy yourself. Because if you are this disciplined, trust me, you will make a lot of money trading. You will make a lot of money trading. Don't become a gambler looking for trade now. You are looking for another trade again. You are looking for another trade. It's not that's indiscipline. Once you've hit take profits for that day, you are good to go. There are some times sef when I'm trading, 30 minutes I'm done. I just take a trade in maybe like 30 minutes. It just let me see if I can, because I know that there was a time that thing happened. I know there was a time it happened. I know there was a time it happened. I always leave my trade. There was a time it happened. Um, when was that? When was that? Okay. Hmm. Yes, it was around this place here. It was around this area. This was the trade. This particular one, this was the trade around this area. And my students were like, Gideon, in 30 minutes you are done for the day. In 30 minutes you are done for the day. That's just it. When I took this trade, boom. Immediately I took this trade, market just like the way the thing just moved to the upside. Moved to the upside. After like creating this candlestick, the next candlestick hit my take profit. I was done. Like I was literally done for the day. No more again. In how many minutes I'd already made what somebody working for like for how many months we'd make. For how many months we make. I've already made it already. You can be working for what somebody's making working to make for 5 months. I've already made it in 30 minutes. Is that not crazy? So once you have taken that trade, you are done for the day. So just you guys should know how the session, know your time of trading. Like now for GBP USD, I will strictly advise London session. London session is a very very good. That's in the morning by 8 a.m., 9, 10, 11. Also New York session for GBP USD also helps sha, but if you work with New York and London session together, you will make good money. Then gold, for gold, you see gold I advise people to just trade New York session. New York session. New York session is a very good time for gold. Though London session sometimes in gold used to pay. London session sometimes in gold used to pay. Even me, as a trader that I am always focused on one market, which is GBP USD. I am focused on GBP USD. But that does not mean I don't look at other markets. For example, I just selected a few markets that I look at, which I'm going to be showing, I'm going to be revealing to people. I'm going to be revealing to people. So I just selected a few markets that I trade, which still gives me good amount of money and pips that I still trade during this session. So, and I'm going to tell you the session I use. I trade Euro USD, I trade GBP USD, I trade gold. I trade gold too. I still trade gold. You can see my trades on gold. I still trade gold also. I still trade gold. You can see this I bought gold and look at still where the thing hit my take profit once. See you can also see this. You can also see this is my trade on this is also a trade I took on gold and look at my take profit has been hit. Then also I also trade US 30 and I also trade NAS 100. I also trade NAS 100. NAS 100. Then once in a while I trade BTC, Bitcoin. when I'm when I'm when I'm just in the mood to trade crypto or I want to observe my investments, I usually observe the Bitcoin market because invest in crypto a lot. So I usually check the Bitcoin market to see how my investments are going. So I basically just I love trading British GBP USD. GBP USD gives me a lot of joy. GBP USD gives me a lot of joy. So you both should know the sessions to trade. Like now, for let me just tell you guys now, gold US 30 NAS 100, I usually make use of New York session. Euro and GBP USD, I usually make use of London session. So those are the sessions I usually use to trade all this. Those are the sessions I usually use. Then I'm going to give you guys a secret, a very very good secret that helps me a lot to hit take profit steady. To hit take profit. And before I say it, if you exactly what I said, two or more trades a day, it's enough. Look at now on this day, on Wednesday. On Wednesday, I took a trade. I took a loss. You can also see that I took a loss. If I take profit, if I hit stop loss, I still leave my trade like that. I took a loss on Wednesday. Then I started looking out for another trade. I saw another trade. If I had taken a loss on this second trade, I would have been done for the day. Two or more trades, one or two trade is just the best. I took a loss. I was okay. I did another analysis. Then this my second trade hit my take profit. I was done for the day. I was good. I did not want any other trade. I had already recovered what I lost. I already added profits to the recovery. So it helped me. It helped me. So one or two trades a day is okay. Don't stress yourself. So back to what I was saying. The secret I want to tell you guys. The secret I want to tell you guys. Anytime I'm trading, anytime I'm trading, I always make sure I look at dollar. Dollar is one of the things that I look at that really helps my trading a lot. For instance, now I just want to use this period, this session here. You can see that dollar went up. You can see that dollar went up. Let's go to GBP. What did GBP do? You can see that GBP came down. GBP came down. So anytime I come in the morning, I come to the chart in the morning. First thing I do is I analyze dollar. When I analyze dollar, then I can do my analysis on GBP USD, then watch how it plays out. But anytime I'm analyzing it, I always make sure that it is the opposite of what I analyzed on dollar. Like they should be opposites. They should be opposite of each other. That's one thing I always make sure of. They should be opposite of each other. So with all that said, I'm going to talk about last thing I'm going to talk about is know the market session to trade. Like stick to a particular market. Sticking to a particular market will help you as a trader. Don't start going around looking for different markets before you know you are trading this, before you know you are trading that. If on GBP USD you are not seeing a setup, you can go to Euro USD. You can just select a few market that you believe that they really move like a lot of pips during the day. You can just check on that market, do analysis there. If you see a setup, watch out for that setup to play out. Don't be saying you want to analyze Australian dollar USD, you want to analyze Euro USD, you want to analyze GBP JPY, you want to analyze GBP USD, you want to analyze gold, you want to analyze US 30, you want to analyze NAS 100. Like you will be confused. You'll be confused as a trader. Stick to one market. If you stick to one market, trust me, you will make a lot of money. And with that, I want to say a very big thank you. I want to appreciate all of you for joining this live session. I'll be ending with that. For those of you that,
Thank you so much, bro.
yeah, you are welcome. So for those of you that actually watched and listened, for those of you that actually watched and listened, I'm going to be doing a giveaway. I'm going to ask a question in the comment section. I'm going to ask a question in the comment section. And if any of you can answer me, anybody that answers me first, I'm going to give that person a little bit of money for the person so that the person can enjoy his evening. A giveaway is going to be
Give
giveaway
away, give away.
the giveaway is going to be done. So I want to thank all of you for joining this live, and I will see you guys another time. Thank you. Thank you for having me.
Thank you so much, bro. Thank you so much, bro. Um, Indeed, we have learned a lot. Thank you so much for joining. We sincerely appreciate you. For those of us that are live, I can see Cho. Yeah, thank you so much for joining. And also, giveaway time. Oh. Boss wants to do giveaway for us. Should we do some analysis? But I hope you guys have learned a lot. I hope you guys have learned a lot. I hope you guys have learned a lot. Thank you. You're welcome. Thank you. Should we do some breakdown? It's up. You need to be here. I need to add you. Let's do some volatility indices outlook. You need to be here. Please subscribe, like, share. Please. Okay. The giveaway question is, what are the types of analysis? What are the type of analysis? If you have the if you follow the class, he said that. So please say it and get your prize. Message us. All right. So what are the types of analysis? I remember vividly he said that. Technical fundamentals. Is that correct? Is that really correct? To our host for the giveaway.
No, no,
He
no,
said
that's not correct.
tech. That's not correct. We're still looking for the correct answer. We're still waiting. It was yesterday we did volatilization 51S analysis. Somebody asked, and we did that, and I think it's going to our direction. We did that live. Let me share it. We're still the question is still out there. Divine said technical
Divine,
analysis.
he has gotten it. He has gotten it.
Okay, please contact us.
Drop,
Are you on the group? Are you on the group or how? Okay, let me drop the contact.
just drop. Let him just drop his account number on the comment section.
Okay, just drop your account number on the comment section. That's how we'll do it.
Divine, that's divine. Divine.
Divine. Yeah. Okay, so yesterday we did this analysis. Somebody asked for it, and we did this analysis. That when it gets to this region, I remember vividly. I said we should sell from this other block, but price went above, took out liquidity above, and that's why we had that sell. That's why we had that sell. Yeah, drop your account details, right? So while we're waiting for Divine to drop his details, one of our analysts will be joining us. Also, one of our analysts will be joining us soon. So we drop the details. We can't see the details. Oh. Okay, Jude. One of our analysts is here. Welcome, bro. Welcome, bro. Welcome, bro. In fact, let me stop sharing so that you share. Please, share your screen. Share your screen. If you have one or two things for us, I want you to
Um,
do. I want you to do one volatility pair, just one volatility pair for us, so that we just end with that.
okay.
Maybe we should do
I'm not. I joined it with
some.
my top.
Okay, join with your tab.
Yeah. So I don't know. Let me try and get my laptop. Let me even see if it's still on.
Okay, but you can also see do share with your tab. Oh.
Tell him about the then button.
Guido, have you sent it? Have you seen the account details?
I'm just seeing Zenith Bank. I'm not seeing any other thing.
I'm not seeing. I'm not. Yeah, I'm not seeing the account. We are still waiting. We are still waiting. Also, you can join our mentorship. You can join our mentorship. All right.
I'm sorry for the delay. My laptop is on now.
Yeah, you can drop it on in the group chat. No, no one will get it. Will send it. No, we're waiting for you. We're waiting.
Okay, let me disconnect from here so I can join my laptop.
Okay, okay. Bro, how was the NFP? Gideon, how was the NFP today?
It was okay.
Did you trade it?
So, yeah, I caught good. I caught good trades on gold.
Wow, nice.
GBP USD no gree pay.
That's how it is sometimes. All right, so please also register with our link. SNES, register with our link, all right? Register with our link. If you register with our link, you can also, this will give you a chance to join our signal group, which is the area trader signal group. If you can fund your account, join, like, fund your account live, like you send us a screenshot after creating your account, you send us a screenshot, we'll confirm, then we will we will then add you to the group, right? We then add you to the group. We have 10 people live. Wow, glory to God. We have 10 people live.
Can you all
All
see
right,
my
so
screen?
create the group. Yeah, we can see your screen. We can see your screen. Thank you, bro, for joining.
Um, okay. So let's quickly analyze this volatility VIX 25. Sorry. So quickly, what can we see here? This 24-hour time frame. So each of the candles here is formed after 24 hours. So this is like a daily charts, right? So quickly, without wasting much time, what can I see here? What can I see here? What can I see here? So I don't want to go backwards more than this. I just want to do my analysis from this viewpoint here, right? So here I saw a leg, I saw a low here, then a high. Let me quickly use a part to mark that out. Okay, so I have a low here. I had a high, a low, then overall I had this high and a sweep of this low, right? Before having this leg upwards, right? So as an SMC trader, what do I call this, right? I'm going to call this a change of character after seeing this sweep of this previous low, right? At the same time, this is a sweep of sell side liquidity. So this is a sweep of my sell side liquidity. And what do we say? Like after you have a change of character, you're expecting the market to pull back to a valid institutional reference point, right? Before continuing its downtrend, right? So, and we've also been told, I want to quickly clear this off. Okay, let me just, and we've also been taught the factors, right? That the factors you consider while trying to pick out a valid reference point in the markets, right? also be taught the factors to consider. So on looking at these 24-hour charts, after seeing that change of character or a sweep of my sell side liquidity, I'm going to mark out these points as a valid institutional reference point, right? I guess I don't even need to go through the factors again because it has been repeated over and over again, right? So this is a valid supply zone, also an order block or an institutional reference point in the market. So I'm expecting, what am I expecting from these 24-hour charts? I expect price to go all the way, right, and mitigate this zone right here before continuing its downward push, right? So and on this type of time frame, I'm on the daily time frame. I'm going to be using a confirmation entry for this type of move, right? Except you want to swing trade, except you want to swing trade. So okay, now okay, now if you were in our day three class, you're in the day three class, we talked about fair value gaps, right? And how they can be and the effects they have on the markets, right? So now you're seeing a reaction from this point here. So this reaction is from a fair value gap that is sitting right on this leg, as you can see. Now you have this fair value gap here, right? But then I will not consider this as a sell move that will take out this low, right? This fair value gap will only hold price to a considerable extent before pushing back upwards. Now I also have a fair value gap above this zone here. I have a fair value gap here, so I'm expecting the price to just give a fake reaction here, then push upward before reacting off this valid point, right? Why? Because I also have a fair value gap here, and this is um a valid institutional reference point, right? So now after saying this, I can drop down to my 4 hour time frame and come down to my 4 hour time frame to see what I have here. Okay. So now after a sweep of this sell side liquidity, right? For those that want to do a short scalp, after a sweep of the sell side liquidity, you saw a change of character right here. Saw a change of character. So you expect price to be pushing to the upside. You know you already marked a zone on your 24-hour chart. So expecting price to push upward all the way. So you're having so many buy opportunities to that reference point, right? So you can keep catching the buys down to that point. So if I come down to my 4 hour chart, I saw a change of character here. I saw this nice change of character. So okay, price pull back to this valid zone here. Then I saw a break of structure to the upside, continuous push to the upside, and just continuously like that. So you keep seeing this bullish trend right now, right? So that's valid zone you marked out on your 24-hour chart. So this can also serve as my break of structure. So after I tap on this supply, I had a break of structure to the upside. Now you mark out another valid zone. So you tap another break of structure, and you can keep catching this till your 24-hour supply zone, right? So now after seeing this break of structure, what is my next view in this market? What is my next view? Now I expect price. Remember this reaction. You're having this reaction of a fair value gap on the 24-hour time frame, right? And we said since we have another fair value gap above this fair value gap, we expect this to hold price to just a reasonable extent, right? And if we push above, we fill this fair value gap. then go also to this other fair value gap above it, fill it up, then tap on this zone or mitigate this zone before that downward push, right? So now we can mark out a valid zone where we expect this fair value gap to hold the price to an extent, right? So considering the factors that make up a valid demand zone, considering the factors that make up a valid demand zone, I can pick this. This can be a valid zone here. This can be a valid zone. Okay. So there's a reason why I want to be considering these other zones here. These zones I have here. This is also a zone, but there's a reason I won't consider these zones, right? So I don't expect markets to come all the way down to this point of interest. I want to consider this. So this will serve as my decisional point of interest.
Yes, we don't want this to another goal. Why can't those they move? I don't want you answer those people. They miss
And
this
um,
forecast.
so this will serve as my decisional point of interest, and this will serve as an extreme point of interest, right? So this will serve as an extreme point of interest. Okay. So now, why do I call one a decisional and one an extreme? Because I have two valid um demand. I'm expecting price to either react from here or here. So in cases like this, I'm going to use a confirmation entry, right? For cases like this, because this is decisional and this is an extreme. So I'm expecting that a reaction from here or from here, right? So now why will I not consider this again as another zone? I have this fair value gap here, and I saw it has been filled to an extent, right? So I don't want to consider zones below this decisional point of interest because the fair value gap I have here have been filled up to an extent. Then the other small fair value gap I also have here has been filled to an extent, and this also has been filled to an extent, right? I'm satisfied with this tap on this fair value gap, so I won't consider zones below this decisional point of interest. So now once I see a tap here, I'm going to wait for confirmation, then take a valid entry on this decisional point of interest and buy all the way up. So this is what I'm expecting for volatility index 25. So for those of you that trade deriv, you can wait for a tap on this point of interest before wait for a confirmation, a good confirmation entry before um taking this trade, right? So I think we did the last one we did on our live stream. I think I still have a picture of it. I mean, we did it and it played out nicely, right? For those of you that
That's
took that,
V100. Yeah,
yeah, it played out nicely.
600
I think,
and V75.
yeah. Let me see if I can still get the picture or something. Okay, yeah, here it is. Can you guys see this? So we did this on a live stream. That was the last class also, the last session. Or no, this was a weekly outlook, right? This was on last week Sunday that we did this, and it played out nicely. Played out nicely for those of you that took this trade. So once you see a tap here, you can wait for confirmation before taking an entry at this point. So yeah, that will be all for now.
Yeah, thank you so much. Thank you so much. Thank you so much for that. Very powerful. So I was still looking at that. So I was still looking at that setup. I was still looking at that pair, and it's similar.
Okay.
Similar. We got similar. Got similar. confluences.
Okay. Okay. So do you have any question? Any more question for this session? If you have your question, please you can ask.
If you want us to do any pair, you can also ask us to do check any pair like you want to trade, maybe you want to analyze, you don't know where the direction is. You can also ask. You can ask. And also you can join our mentorship too. Yeah, join our mentorship. It's not cost. Just message us. Join our free WhatsApp group. Then you can message us, message admins, any admin there. Then contact them and tell them you want mentorship and all. Then we'll guide you through this journey. All right.
And
So if
this
you have
this
any
is going to
question,
be one-on-one mentorship. I mean, you're going to be having
yeah,
time
yeah, yeah, yeah,
one-on-one.
yeah.
So I mean, it won't be like a session you have together with other people. It's going to be like timed, you know. So you're going to be we'll be having time for you, you know, to answer all your questions. So if you want to join, you can message any of the admin from the group.
Do you
So if
want
you want
us to
us to
do
have,
any pair, any other pair?
and if not, we can call it a day.
Yeah, we can. Tonight was really powerful. I love tonight's session. Also, get ready for Sunday weekly outlook. Oh. We're going to drop a lot. Sunday weekly outlook is
Yeah.
going to be fire. Just prepare.
So since no question, I
Please
think we can call it.
subscribe, share, like, please. Please, if you are new here, please subscribe. Alright, please subscribe and like, share. It helps the algorithm of the video. Yeah, here on YouTube. Okay, Crash 500. Someone just asked Crash 500. I think we are the one that you are the one that asked for Crash 1000 and all those spares. Yes. Then it's like you like trading Crash and boom. Crash 500. All right. So let's do Crash 500. Let me just share my screen. Or it Jude, you do that now. Just do Crash 500. Crash 500. Yeah, Crash 500. Just do that.
Sorry, can you guys hear me?
Yeah, we can hear you.
Okay, so trade alongside the trend. The trend is your friend. So as you can see here, you don't even need to do much on this market. You already see you're having a trending market. Market is going bullish, right? So just keep on with that trend that you have. So flow with the trend. Here you have a break of structure, then a pullback to a valid point, and you have another break of structure. I think you should have been told that fair value gaps are also valid entries. Fair value gap are also valid entry points in the market. So now you're seeing another break of structure to the upside, right? Now you saw this. Now, if you've been following clearly, you already see a zone that you're expecting market to retrace back to. You're already seeing a zone down here, and this is a nice fair value gap that you have here that have not been traded into. This nice fair value gap here. have not been traded into, and it's even intersecting with an inverse fair value gap. So, what do I expect from this market? What do I expect? What do I expect? Remember, fair value gaps have the potential to hold price to an extent, right? So here is fair value gap plus an inverse fair value gap. So what am I expecting from this market? Now, this fair value gap has not been traded into, right? So I expect now this will serve as a liquidity above this point of interest. This should serve as a liquidity. Now I'm expecting this fair value gap and intersecting with an inverse fair value gap to create a smart money trap above this zone, right? So what do I expect from this market? Simply, simply, I'm expecting the market to come back, right? Clear this liquidity I have here, right? Then fair value gaps have the potential to hold price to an extent. So create a smart money trap with respect to this fair value gap, right? Giving a fake reaction. Now clear that liquidity again to the downside before tapping on this zone. Then I'm expecting that massive upward push to the upside, right? So I expect this fair value gap intersecting with an inverse fair value gap to give me expect it to give me a smart money trap. It should trap acting as a liquidity again, right? So after I expect the market to come down here, clear this liquidity and create a smart money trap with respect to this fair value gap, then clear that liquidity again before tapping me in from here. So I'm expecting to go long from here, from this zone. So my stop loss just below my demand. I might take profits a previous high. So yeah, this is what I'm expecting from this market. So is that easy? Is that simple, right? You practice over and over again, and you get used to it. So is this easy?
All
So
right, you get
anything
that? Did
else?
you get that? Did you understand that? Do you not? Do you understand that? All right,
Are
all
we
right, all
good?
right. Um, yeah, we're good. We're good. Thank you so much, Jude, for joining. Thank you so
Okay.
much. Um, thank you so much, brother. Also, thanks to Gideon FX, my brother. Thank you so much for joining us tonight. Indeed, it was powerful. It was powerful, and we sincerely. Okay, Reno said he got it. Okay, good, 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 good. All right, all right, all right. That's good. So thank you so much for joining. Please and please, I want to beg you, please like, share, subscribe. Please, if you have not subscribed, please, please, please. we they beg.
I swear, please, you guys should subscribe to this channel. You're giving you guys quality stuffs.
I
Please
think
make sure you like,
let
to
me
friend.
just show them something. I think
Okay,
I can see that boom 100. Let me share the update. Boom
okay.
1000. Sorry. Boom 1000. I think it has already happened. What I expected. I just came in. I'm seeing it. You know, we wanted to buy from this lowest order block. I don't know if you guys can see my screen.
Yeah, we can see it. We can see it.
Okay, good. I wanted to buy from that lowest order block. If you look, I marked this out. This I think I did this morning. But what happened? I saw that the market came into did not come into this last one, right? Before giving us another change of character to the upside. Before another break of structure. Before another break of structure, what did I do? I saw this liquidity here. I saw this as liquidity, right? Saw that as liquidity. And I saw this other block here and I marked it out. And that's why price came into the other block. You can see price came into the other block and tapped us in. And this is very powerful. From there, your stop loss just below here, and you'll be targeting this side. So that overall target that we were targeting before is now our target for this. So Reynolds, where you should be looking out to buy from is this point coming. Is this point. Wait for price to come into wait for price to come into that region. That's mitigation block, yes. That mitigation block, and buy from there. Buy from that point, this point, buy from that point, and ride it to the upside. I hope that is clear. That's clear. I hope that is clear. Please, you have not subscribed. Please subscribe. Please and please subscribe. Share, like. Please don't go without subscribing. Thank you so much for right. I hope you got that. Reynolds. The this place now is where we want to buy from. Region where we want to buy from. So wait for it to come into 1376 Then for the crash 1000 that we did that last time, and we Jude, I feel we should do one maybe like step index. I don't know. I don't know. Just check the chart though. Check the chart if you can see something.
Okay, step index.
Yeah.
Okay, let me see. Okay, I think I'm seeing a short opportunity. Okay. Okay, do you have
Let
an
me
analysis
for what?
step index?
No. I don't have currently.
Okay.
Let me just allow you share screen to that.
Okay, okay. All right, can you all see my screen on?
Yeah, we can.
Okay, now if I want to take a short scalp, right?
I'm coming.
If
I'm
at
coming. I'm
all,
still adding it. Wait.
okay,
Okay. Yeah. We can see it. We can see it.
okay. So if I want to take a short scalp on this trade, right? This is a 4 hour time frame. Now I saw a sweep of sell side liquidity and relative this double bottom, right? That was swept to the downside. So this is a sweep of sell side liquidity. And this double bottom here also indicating liquidity, right? Now for my short scalp, I'm going to be looking for buy opportunities that will take out this um previous high here. So if I come down to 1 hour time frame, so now this indicates okay. Let me go down to 2 hour time frame. Okay, so here I have a change of character to the upside. So I'm going to be looking for buy opportunities, right, for a short scalp. So this I'll mark as my minor change of character, and this becomes a major change of character, right? So this is an internal structure, so I'll call it a minor change of character, and this becomes my major change of character. So I'll look for a valid institutional reference point where the price is going to retrace back to, and I want to also see a good liquidity build up above that zone, right? For to mark my confluences for taking this trade. So okay, so now I'm going to look for that zone. So now let's see. I have a fair value gap here that I've not been traded into. A nice fair value gap. Let me see. Okay. So I have this nice fair value gap here that I've not been traded into. So this zone right here, this zone, this whole zone right here is a valid zone for price to retrace back into before pushing to the upside. So for this type of trades, I will use a confirmation entry here
Well,
also, except you are swing trading. So once market retraces back to this zone, and I want to see a good liquidity build up above it, and once the market retraces back to this zone, I'll wait for an internal change of character, then enter for a long. So this is what I'm expecting. If you want to short, if you want to scalp this market. So this is a good scalping opportunity here. Just wait for market to retrace into this demand zone and wait for an internal change of character, then you can enter for a long position. So this is what I have for step index.
I just saw the same thing, sir. So it's clear. It's clear.
Okay,
You can
you
look
have the
for
same right.
shorting into that. Yeah, you can look for shorting into that your demand zone, then buy. So you can just go. Okay, let's check 1 hour time frame. Check 1 hour current 1 hour time frame and show them something. You can look for short, put it down. All right. So this your demand zone you're waiting for. Currently, you see that the market has given us a clear shift of structure, right? And tapped into it. This breaker block, that block that is there, it tapped into it. It tapped into that block. That's this green candle that is up here. It tapped into that block. So it's currently it has given us a shift of structure already. If you want to wait for it to come into maybe the fair value gap before it's short, it's another way to wait for it. But I think the market is already reacted from a a breaker block, right? A breaker, yeah, that breaker block. Market used that breaker block to push price all the way down, and now we we're expecting the market to go down into that your region, right? That your demand zone, then will now buy to the top. So it's clear, it's clear. So I think that will be all for today. That will be all. Please subscribe, like, share, and thank you so much for joining us. God bless you. God bless you. God bless you. Great, great, great. That's it. That's it. That's it. That's it.
Yeah.
See you tomorrow. Thank you so much.
All right, guys. Thank you all for joining. See you guys tomorrow.